Howdy, who all my stock market gamblers? Welcome today. I'm Tall Mike. I'm so glad you're here. Well, it's Monday. Stock market's back open. What's going on? Well, the Dow, it's up about 80 points. NASDAQ up about 100 points. We're having kind of an update. All right, over the weekend, I kind of listened to what all the experts were saying, and I learned a lot of stuff. I learned that inflation's been conquered, right? I've learned that the recession that's coming, it's been canceled. I learned that the Fed has navigated us into a soft landing. And I learned that, hey, we're in a new bull market that's going to go to the moon. That's what I learned over the weekend. Now, as you probably know, I don't agree with all that. I do not. Now, the question is, are new highs coming in this market? We're only down about 5% from the all-time highs. We're only off 5%. We could do that relatively quickly. We could do that this week. Now, do I think we're going to get to new all-time record highs? I do not. I think the market's going to pull back in. I think that the market is going to come down. Now, right now, this is kind of like the calm before the storm. I mean, there is no fear in this market at all. No fear. There's extreme greed. Everybody's loading up on the calls. Everybody's buying calls on the market, expecting it to go higher. Now, all right, when that happens, that's usually the time that the rug gets pulled out from underneath the market. We'll see how this plays out, but I do think it's going to come in. We'll see. Could be a new record high. I'm not saying that's not possible. I'm just saying I don't think that's going to happen. All right, let's get over to the real estate market now. Over the weekend, I read some article where Barbara Cochran, she's always pushing real estate, right? Anyway, she says the Fed is going to pivot, and this is going to cause houses to skyrocket. Now, I say, Barbara, you don't really know your history. Usually when the Fed pivots is actually when the time that the houses come in. But her philosophy is that the Fed's going to pivot and then the houses are going to take off. Now, if you're one of the lucky people, you can buy right now. You can buy right now and you're going to be able to refinance later because they're going to lower the rates. Now, a lot of real estate agents, they have this cry right now that you marry the house and you date the rate. Okay, well, that's a possibility. What if you buy the house and rates don't come down? What if they keep going up? Well, that's a problem, right? Okay, yes, it is. But if the Fed pivots, the rate will come down, but I think your house is going to come down along with the rates. But according to Barbara, get lucky, buy right now, hurry up, you're going to miss out because you can always refinance later. Now, granted, she's got a lot to lose if her house prices come down. She owns a lot of real estate. She wants to keep her empire up. She doesn't want to see her empire crumble. Now, Dave Ramsey, he's another guy that says this is like the best time to buy. It's the best time to buy right now. Hurry up, get in, the water's warm. Okay, all right. So anyways, a lot of you like the graphics that I show you. Now, this is one of my high-tech graphics, okay? Now, if you take a look at this chart here, now right here was the 2008, right? Okay, that was 2008 where it says housing bubble, 2008. Well, we're actually a lot higher than when the housing bubble was. Now, doesn't that mean we're kind of in a bubble right now? Yes, that means we're kind of in a bubble right now. Now, that's my opinion that we're in this bubble. Now, what's happened to every bubble in the history of the world? Every bubble in the history of the world has popped. This bubble will pop also. Now, I love reading the comments, and I'm not picking on this gentleman per se. His name's Damon, but anyways, and he left a great comment, very long, very well thought out, and he wanted me to know that he's smarter than the average person because he's an analyst, and, maybe he's a chief analyst. I don't know, but he's an analyst. He analyzes things, and that puts him smarter than most people. Now, I'm just a real estate broker and I am an economist, so that puts me below the average person, but I'm going going to kind of debate, if you will. I don't really want to debate. I don't want to change Damon's mind. His mind's made up. He knows where the market's going, and he thinks this housing market's going to go higher. He thinks this bubble will not burst. He thinks that the bubble has a lot more to grow, a lot farther to go. And he could be right. I'm not saying he's not right. I'm just saying I don't agree with his take. And that's perfectly fine. He seems like a nice gentleman, right? Okay, so he just has a different viewpoint than me. Now, we both agree that everybody's still got equity in their home right now. And they all are locked in at 2.8%. So they're not going to sell. They're not going to sell and get their equity out. Now, how are they going to get that equity out? Well, they'll probably just wait for it to come down and disappear, in my opinion. But okay, so he thinks that houses are going to go up from here, and he states several reasons. Okay, so the home builders, right? They have a very high cost to build a new home. To build a new home is costing a lot of money right now. Now, okay, now I'm an old guy. I'm going to give you an old guy story, right? Okay, so, back in the 1980s, oh my goodness, in the 1980s, well, I was going through my real estate broker classes, and I was taking an appraisal class, and I had to appraise a couple of properties. That was part of the assignment, that we had to appraise these properties, and we had to appraise them different ways. Like, one way to appraise a property is to compare it with other sales, right? So you do comparables. All right, and so that was working really well. I came up with the comparables, and the house, well, it would appraise for right around $120,000. But then we had to do it a different way. We had to do, well, a replacement cost basis, meaning if the house was, you started from scratch and you had to build this house, how much would it cost to replace the existing house? Well, this was a large house, and it would, back then, it would even cost about $200,000 to build the house. It cost $200,000 to build the house. And I couldn't get my head around this. Well, it costs $200,000 to build the house, but we look at the comparisons and we know that they're selling for $120,000. So, I asked my professor, I go, I don't get it. Well, how can you possibly appraise on a replacement cost basis? It costs $200,000 to build the house, but on the comps show it's selling for $120,000. And what you have to do at that point, the professor said, is to place a negative value on the land. So the land was worth negative $80,000. The land was worth that because it cost you $200,000 to build the house. You can only sell it for $120,000, and so the land had a negative value if you put a house on top of the land. Now, isn't that interesting? Well, okay, so I agree that we're having a very high cost to build homes. Now, people say, Mike, there's no way that a house could sell below the cost of building. Well, actually, it can, and I've seen it, and I lived through that era where houses were about 50% of what they cost to build. Now, isn't that fascinating? Okay, so I do agree with them. Houses are expensive to build, but I don't agree that all the houses are going to sell at the high prices that they're building them at. Now, his argument is that with these high interest rates, right? You see, because prices are high on the house and interest rates are high, right? Now, he's saying that people are going to have to jump in and just accept these high rates. They're going to have to jump into the market. He's even kind of insinuating that you'd be crazy not to buy at these prices because rents go up year over year. Well, actually, that's not true. Rents are coming down right now. But he thinks that you have to jump in and accept these high rates and these high prices because otherwise you're stuck in the rental market that's going up. Well, the rental market's actually coming down. So that's where I disagree a little bit with them. Now, he's saying, but Mike, nobody is going to get foreclosed upon. There's not going to be any forced selling this time. Everybody that's bought in the last few years, their FICO scores, well, it's 750 or higher. They have these high FICO scores. Okay, I agree with that. They have these high FICO scores, but everybody that's bought in the last 2 years, how much do you think they put down on the house? How much do you think they put down? You think they put 20% down? No, the average person has put 6% down. 6% down on the property. Now, why didn't they put 20% down? Because when you put less than 20% down, you have this thing called PMI, which is insurance for the lender. You have to pay it. It's about $200 a month. Let's just round numbers. Sometimes it's 100, sometimes it's 300. But anyways, PMI, you have to pay if you don't have 20% to put down. So all these borrowers, they're borrowing money from the lender. They have 750 credit score, but they couldn't save 20%. They couldn't save 20% when they were renting a house, so they went out and bought a house. And you think that houses have expenses with them? Well, I think they do. I think what's going up right now is property taxes are skyrocketing on the house. Insurance is skyrocketing on the house. Utility bills are skyrocketing on the house. All expenses, if something breaks, oh my, if something breaks, and this was his point also, if something breaks, it used to take about $50 just to get the plumber to come to your house. Now it takes over $200 to get a plumber out to your house just to make a house call. Expenses have gone way up. And he's arguing that point. He's arguing that point that's why houses will stay high. I'm taking that exact point and saying that's why people can't afford their house, because houses have expenses to them that a lot of renters don't have to pay. You see, when the roof starts leaking, the landlord pays it. When the heater goes out, the landlord pays it. But when you own the house, you got a lot of bills that you really didn't account for. And the one thing that a lot of people haven't accounted for recently is inflation. Inflation is out there and it's running rampant. The food costs, the cost to put gas in your car, the cost to heat your home, everything's going up. So people that have bought these houses with 6% down in the last year, a lot of them are financially strapped. A lot of them are already in trouble. Now, I would say a very, very conservative estimate is that 10% of homeowners are under financial duress right now. Now, granted, there's not a lot of foreclosures because, yes, the homeowner can still sell their property. They have equity. If they bought like 5 years ago, they have equity. If they bought last year, there's already 500,000 homes. 500,000 homes that are underwater, completely underwater, because it went down by more than the 6% that they put down on the house. They already dropped by more than that. So if they wanted to sell it, they'd lose their 6%, but they'd have to come up with another 7 or 8% just to get out of the property. So a lot of them are giving them back to the banks. But a lot of people can still sell if you have equity. If you have that equity, you can still sell. You can still get out of the market. Now, another thing that Damon was saying, the reason that everybody should jump in and buy a home is because it's the best defense against inflation. Inflation's been rising at a rapid pace. Well, let's take a look at the chart again. Let's take a look at our little chart. All right. So you see this little piece at the end here, this tail end where we're starting to go down, Well, that's in the last year. Now, this is adjusted for inflation. But inflation, a house is not a hedge against inflation. I would argue the point that it's inflation that's going to make a lot of people have to sell their house. Because do they want to eat, put food in their mouth? Do they want to put gas in the car to get to work? Do they want to make their car payment so they have a car to get to work? A lot of times it is an unaffordability factor. And that's where we are at houses right now. Houses are not affordable, and they're not affordable for many reasons. Look, people have record credit card debt right now. It's at a record. It's above $1 trillion. It's over $1 trillion in credit card debt. That's a record. Where's their savings? Their savings has been depleted. It's at a record low, right? All right, so what about the car market? The car repossessions, 15,000 to 20,000 a day in the car market being repossessed. And this student loan thing, now a lot of people think that Biden's still going to get the forgiveness, but I think a lot of students are going to have to start paying their student loans. All right, now my point to Damon was that we always revert back to the mean. Now, as you see here in this housing bubble in 2008, right? All right, so we reverted back to the mean before the government started printing trillions and trillions of dollars. Now, Damon was explaining to me that there's a lot of different ways we can revert back to the mean. And he is correct on that. There are a lot of different ways we can revert back to the mean. Your income could double. Is your income going to double? I don't think that's a way we're going to revert back. All right, now they could just make homes affordable again by lowering the rates to 0%. Now, I suppose that's a possibility. It's not my take, though. I think we're going to actually see 10% mortgages. 10% mortgages are what I think's coming. Now, another way we could revert back to the mean is we could print another $30 trillion, and your house stays the same. You see, now adjusted for inflation, houses are already starting to crash. They're starting to come down. The bubble is starting to pop. Every bubble pops. Every bubble reverts back to the mean. It's just the way it works. Now, Damon's saying, hey, we can go sideways for a while. Yes, we can. Why we print another $30 trillion? If we go sideways, that will be a way of reverting back to the mean. And I do believe we're going to print 30 trillion. I think 30 trillion more on top of the 32 trillion we already owe is going to be a minimum number. And I think it's going to happen a lot faster than people think. Now, so that way, I do agree with them that we could revert back to the mean if we print trillions and trillions of dollars. And this is why I think you should have some gold and silver. Now, people say I'm a crazy man when I say that 500 ounces of silver will buy you the average price house. And I don't expect you to believe me on that. I have no proof of that. It's happened before. It happened, well, in 1980, it was about 800 ounces, but I think it's going to overshoot down to 500 ounces this time. That 500 ounces gets you the average price home. This might take no proof on that, just a outrageous prediction. Anyways, if you like this stuff, and Damon, I love you, man. I did appreciate the comment. I don't mean to pick on you. We disagree, and that's fine. We can agree to disagree. I thank you for those comments, Damon. You're thumbs up to you. All right, because what most haters do, I'm not saying Damon's a hater. He just has a different opinion than me, but most haters just go, you're wrong, dude. Or, Mike, you suck. Mike, you're an idiot. Okay, that's most haters. See, Damon was well thought out, and I give him 2 thumbs up for that. We just disagree on what's going to happen. I have my take. He's a little bit more in line with Barbara Cochran, Dave Ramsey. He's in good company. Very smart people over there. I'm just a real estate broker. I don't know anything, so take this with a grain of salt. But before you do, give me a thumbs up. Why not? I'm Tall Mike. It's Monday. Get out there, everybody. Have a great day. Bye-bye now.